closing beat, everybody. Happy Tuesday. How you doing out there? Hope you're having a good day out there. Everything's going well. This is a quick stock market update show that we do to cover the stock market. And so we'll do that here for you today. Hey, first of all, I want to say thanks to all of you that helped support us yesterday by picking on the guy that we tried to get you to tweet to. I appreciate that. We did try to respond to everybody and say thank you, but it just got out of control, and so we couldn't say thank you to everybody. But big thank you for doing that, so I really appreciate it. Also, we're playing a game. It's called Guess the Dow. You want to take a shot? No strings attached. If you're the closest without going over, we can send you a $100 gift card. Website's on the bottom right-hand corner of your screen. You don't have to be a customer or anything. We don't market to you. We don't send your emails to anybody else. You take a guess. If you're the closest, you win. If not, we move on to the next week. No big deal. Our jazz artist of the week is Brian Culbertson. I got a good car ride song for you. I know a lot of people aren't going for like summer car rides and stuff right now, but next time you're going for a ride, it's called It's Time. It's kind of a fun road trip song, if you will. So check that out from Brian Culbertson. Kind of a cool, funky song there. Anyways, let's talk about the stock market today. We got a loss of 26 on the Dow, 4 on the S&P, 25 on the NASDAQ. It was one of those days where we started off really strong. Everything looked good. And then we lost all of the steam. We just kind of faded away there. We bounced this morning on hopes of more stimulus. Old Nancy Pelosi was out there saying, hey, new round of stimulus. We got to have this done by the end of the month, and we want at least $1 trillion. She said at least $1 trillion, by the way. Wants to get that done by the end of the month. The markets were excited about that. Got more good virus news outside. We talked about that yesterday. That continued into today as far as the number of cases declining a little bit there. And the small business loan program is getting a boost as well. That should be done by Thursday. So if you're out there applying and you haven't had a chance to do that yet, you should be able to do that now. And I see Wells Fargo is going to be able to possibly get their restrictions lifted by the Fed so that they can participate as well. So a little bit of optimism to start the day. However, we talked about this a couple weeks ago. Where do we stop on the way up? About halfway. We use the analogy of the glass half full or half empty. If I show you a bottle of water and it's half filled, some of you are going to say it's half empty, some of you are going to say it's half full. And so while the markets are below that point, everybody pretty much assumes the glass is half empty, right? But as soon as we get to the halfway mark, everybody sort of has a difference of opinion there. And so that's where we're at. That's where we got to today. I put a big old black line on the chart so you could see it there. You got a 50% retracement just about in the S&P 500 there. And so that's the question. Is the glass half full or half empty? On the NASDAQ, you got exactly to the 50% mark, which is really just your 200-day moving average if you want to follow along and check that out. But now what you have is even the analysts, some saying, nope, we're going to make new lows, some saying the bottom is in. And so if you look at JP Morgan, one of their biggest quants out there said, in a number of weeks, the S&P, the market, the economy will recover. We'll be back on track here. Everything's going to start to sort of fade away virus-wise, and the S&P could be back to record levels by early next year. That's his advice, not mine. You also had one of the big market pundits out there, Jeffrey Stauss. He said the markets will be back to highs by the end of the year. Well, on the other side of that, you got Goldman Sachs chief equity strategist out there saying the risk is asymmetrical right now. What he's saying is you've essentially got to plan in 25% to the downside, but your reward on the upside is only 10%. And because of that, he thinks the markets are going to be headed lower. So you have the markets kind of at a tug of war right now. Some people think new low. Some people think, the worst is behind us. We're good to go. I don't know. That's just what happens when you get to that 50% market. So I wanted to highlight that for you there. Remember, the stock market does not just hit a low and then recover. It doesn't do that. In our class, actually, if you want to go back to the dojo, I pointed this out yesterday. Go to the market, recession, performance, and stats class off here to the right. What we did is we went through every single recession. Here's one of the slides to show you what we talked about in that class. We went through to kind of see how often do we make a low in a recession, then make a new low. How often do we recover or to make a low early in the recession and then start to recover? Of course, I'm assuming that we're going to call this a recession. Remember that you don't see V-shaped bottoms typically in recessions. It can happen. I'm not saying it can't happen, but remember that it's not typical. So just wanted to share that with you because there's two types of investors here. Those of you that sold on the way down and now you're a little upset that the markets are moving higher and you want it to go lower. And then there's those of you that wanted to scale in on the down move there, and you're like, hey, come on, man, don't go too far. I'm still trying to build my lower cost basis here. And so I think for those of you, your patience is going to pay off. We've got a shortened week, the Friday this week. The markets are closed, and so will Jazz Wealth be closed. But then we have earnings season starting next week, and I think you're going to see a lot of volatility from that. So if you are one who is trying to scale into a position, don't worry about it. You're going to see some down days. We're not just going to walk away from these lows and never really consider falling back towards them. You don't think that's going to happen, do you? I don't know, right? As far as the major indices go today, the Russell 2000 was the strongest, the NASDAQ was the weakest, and sadly, the big tech stocks, they lagged the S&P and the rest of the markets all day. Can't have that. You can't have tech lagging behind the market. If you look at just an intraday chart, compare the S&P to the big tech stocks out there, they lag behind all day. That's going to pull the markets down. Always going to happen there. Now, as far as the S&P, we've got some tough sledding ahead. I drew the line there. I'm going to leave it there because that's our overhead ceiling. That's the big problem area. We talked about it a couple of weeks ago. You could use the 2750 area if you're looking at S&P futures there. It's going to be a tough spot. We're going to need some really good news. We're going to need the economy to start opening back up, even if only on a partial kind of a basis, to get us through these numbers. And I think we're actually going to have to see earnings looking pretty good as well, or at least not as bad as we expected. Like I said, big tech held us back all day. You could see today we started off with a nice gap higher and we just faded all day long, lagged behind the markets. That's not a good thing. We go through some of the other areas of the market. You got oil down about 7% on the day. Supply, there's just a lot of oil out there. There's no other way to say it. We have no confirmation of production cuts, although we saw that the U.S. said overnight that they'd be willing to consider gradual reductions, but we have nothing official from Russia, Saudi Arabia, or OPEC Plus at all. That meeting's on the 9th, and so without any guidance from any of that, we're just sort of bleed lower. The market's responding to the current supply that's out there. Now, most sectors are pulling back after a pretty impressive move. If we look through, basic materials led the way today, up 2.6%, but it's had a really good run. It's up over 10% in just the last 3 days. That's not normal, right? So the fact that it's a little overextended, you saw some of that profit taking coming in today. Home builders looked the same. It did fade away, although they did well on the day. It's up over 20% in the last 3 days. So you just too far. You ran up a really steep hill. You got to take a quick break and catch your breath. That's the best analogy I can use there. Retail's going to be the same. Great pop off of lows. A lot of the sort of second tier retailers out there have gotten a significant pop. I'm going to share one of them with you here in a minute. And so just a little too far, too fast. Over 30%, you expect that if you're going to run up a very steep hill, you're not going to run up that steep hill for very long. You can run up a gradual hill all day long, right? Most of us can handle that. But if you run up a steep hill, a lot of us aren't going to make it. That's the markets, what you have going on there. Gold poked above the 1700 area today, but did fade away. Same thing, just a little extended in the short term, had a nice pop, and pullback is totally normal. We've mentioned that numerous times as that has happened. Let's take a look at some of the cool stuff here. You've got some of the stocks, I mentioned them yesterday, making pretty significant bounces off of lows here. I'm going to go back to our charts here. I'm just going to pop this up here. Here is Kohl's. So Kohl's has had its biggest one-day percentage gains really through this big downturn. That's kind of interesting, huh? So while the markets are bleeding off, the bounces produce some of the strongest bounces in Kohl's. In fact, if you look, if you add today, by the way, that's not on this chart, 4 of the last 12 days, 4 of the 12 strongest days actually have come during this downturn. I highlighted 3 of them in the green for you today, and if we were to do that today, it would fall right here in between. So the last 3 largest days would have come during this entire meltdown. The stock's down over 60%. Is that good news or bad news? We tweeted this out. I think I tweeted this out earlier. Good news or bad news? I don't know, right? Let's look at Carnival, one of the most focused on stocks here during this downturn. I've probably got no short of 200 questions on this one. Same thing, right? If you look at Carnival Cruise Lines, you've got 6 of 10 of the best performing days have come during this downturn. All the green ones there highlighted are from 2020 and during the since the virus high, February 19th, shares fell over 80%. And yet some of the best days are coming with people trying to pick off these bottoms. Is that good news or bad news? I'm not telling you what to do. We look back at all the returns, organize them by best performing days. This is what we found. I think that's kind of interesting, right? So a little bit of news to share with you there. You could take with it what you like. Also want to point out Target and Walmart. That's starting to get attention here because they are not performing the same. Let's look at Target and Walmart here. Which do you think is the better deal? Walmart up 4% over the last 3 months. You've got Target down 20% over the last 3 months. It would seem that Walmart is the better buy here. It is the outperformer. However, when you start looking at the dividend yield and fundamental analysis of the stock to find out who is more expensive on a valuation basis, you've got Walmart trading at 24 times earnings. You've got Target trading at 15 times earnings. However, Target yields 2.71% as of now. On the right, you can see the yield overall. Just to check that out. I don't know if you guys are interested in this kind of stuff. Just trying to throw different things out there to you so you can decide what you think, because I'm not allowed to tell you. So just wanted to point out some of those things, the differences between Walmart and Target, because there is a huge difference in terms of performance and yield and valuation during this drop here, and it's up to you to decide. A lot of people are thinking Target is maybe the better bet as it's kind of discounted there. It's got a better yield. It's cheaper on a valuation basis. I'll let you decide what you want to do there. Just trying to share some different info with you. You like it? Let me know in the comments what you think about that. As far as the S&P 500 today, you've got 58 stocks above the 50-day moving average. That's double digits. That's 12% of the S&P 500 above the 50-day. That's the first time we've seen that in a while. Right? Kind of a welcome sign there. You've got 4 new highs on the day, and we're going to cover a few of them a little bit differently than we normally do. You got Dollar General, Vertex, and 2 REITs, and in particular, we'll focus on those REITs today because I get a lot of questions about this. The first is Digital Realty Trust. The name kind of gives it away, but this is a data center REIT. This is not a physical property or residential or commercial or hotel building REIT. This is a data center REIT. In other words, companies rent space, digital space, from companies like this. And so this stock has done a lot better because, well, think about what people are doing, right? You maybe not renting apartments as much. Maybe commercial buildings have taken a bit of a hit. However, digital realty space has actually done quite well. The stock's sitting at the new 52-week highs there. It's also the largest in its sort of category by market cap. So that one gets some attention there and hit 52-week highs. The other one is Equinix. So same thing, 52-week highs, although it did finish lower on the day. It's had a great run, right? Just amazing run to new highs, so you can understand a pullback today. It's in a similar space, but it yields about half of digital realty. So if that's a consideration that you're looking at, or you're trying to figure out how do you compare these different stocks, well, you might look at yield if that's something you're interested in, because a lot of people go to the REIT space for yield. If you're looking for diversification, well, there are 2 different ones that you can look at that are not focused on apartment buildings or land or hotels and things like that. And so that's kind of another lesson for you here today. We have 0 new 52-week lows, but if you look at the list of stocks that are closest to 52-week lows, you get Waste Management. If you like your discounts, you get Walgreens, Boots Alliance in the mix, and you get CVS, very close to making new lows. American Airlines, not near lows because they had an 8% gain today, so it's got a little bit more room in that respect. All right, every day I told you I would talk about stocks that are making adjustments because of the virus, laying off people, cutting dividends, things like that. I go through a list every single day. I go until I just can't take it anymore, put together a whole list. The good news is there's a whole lot less companies out there today. Boeing has suspended operations of their 787 production in South Carolina. Abercrombie & Fitch is furloughing all of its U.S., what do they call them? They don't call them employees. They call them team members, something like that. They use a different word for that. AutoZone gave us some updates on the virus as well. Not good in particular, but stock was still higher by 2% today. Beazer Homes says, oh boy, we're seeing a whole lot less traffic and a whole lot less sales out there. These guys sell homes, by the way. They build nice, fancy homes. Stock was down 11% today. BJ's Restaurant, ticker symbol, BJ's Restaurants. Yeah. BJ's Restaurant, they're not paying their rent in April, so add that to the Cheesecake Factory mix. They're still open, right? You just can't come in and eat. They're doing drive-up service, online orders, and things like that, but they're not paying their rent. You can do that when you're a company. 7.5% higher for Ralph Lauren today. They said that most of their U.S. and EU stores will be closed, will remain closed. But that's pretty much it, right? Remember Monday, and I remember last week, I just had this laundry list of stocks to go through. That is pretty much it today for that. A couple other stocks in the news today. Blue Apron. You might have noticed the stock a little bit wild lately. Blue Apron trading around 11 bucks today, pretty much flat. There's a company that's increased their stake to 5% from 1%, so that stock getting a little bit of a boost. Kraft Heinz, we talked about this on our Outside the Virus show that we have on Instagram, which we're going to move to YouTube starting Monday, so you get a little midday update on things that are going on outside the virus. There's a lot of stuff going on, and it just doesn't make the news, doesn't get headlines. It could have to do with your investments or anything, but people are focused on the virus right now, so we just thought we'd go outside the virus and cover some interesting things. Kraft Heinz up 2.7% on the day. They're seeing really strong sales, which are offsetting higher costs. People are eating more macaroni and cheese, the Kraft macaroni and cheese, the blue box there. So shares higher by 2.7% there. What else do we have? ExxonMobil, I believe that's in the scroller below. Stock was higher by about 2% today. They're cutting their capex by 30%, and they're going to, right now, they're trying to keep the dividend. So if you own it because of the dividend, as of now, it looks like it's safe. They're going to do everything they can to keep the dividend there. What else do we have? Dividends coming out. Speaking of dividends, you got General Mills, 49 cents, and MasterCard paying out 40 cents. It is ex-dividend day for the both of those, and that is all I have for you today. I'll take a chance to try to answer some of your questions. If you're watching on YouTube, we watch the question stream there, and I'll try to answer anything that I can. If you're watching anywhere else, thanks for watching, but I can't see your questions. Come join us on YouTube. Do you have a feeling that oil will go up? Oil is cheap, so it's going to be a while. There'll be a lot of volatility in the short term. There'll be some spikes higher and lower, especially as we find out about production cuts, but oil is very much a trending commodity, meaning once it's in a downtrend, you don't want to bet against it. I've tried. It's a tough one. When oil trends higher, you just want to be a trend follower in oil. Right now, it's in a downtrend. There's so much oil out there. It's going to be a while before we soak all that up. We need to get our economy back up and running. We need to get people flying again. Remember, JetBlue said 7,000 people are traveling a day on their flights compared to 120,000. So that means less planes flying, more empty seats, obviously, less trips to be taken there. So we'll see what happens. Yeah, the lights broke, by the way. The lights they normally change with the color of the market. I think it's because right at the end of the day, the S&P was just like 1/10 of a point higher, and then it went red. But yeah, it's all jacked up back there. Is the glass half full or half empty? Doesn't matter as long as it's a glass of wine, right? Or lately in our wine and wealth classes, we've been calling it whiskey and wealth. We've been pulling off the top shelf there with this market moving the way it has. We'll probably do the same on Thursday because it's been kind of a good time. How do you feel about the month of April in terms of market performance? Well, it doesn't really matter how I feel. It's a matter of how the markets feel. I'll pull that up for you. Let's help you out here. Here is the month of April on the charts there. This is every month of April going back to 1993. The performance there, the average gains 0.63%, median 1.25%. It's positive 77.7% of the time. So if you like the stats rather than just some random guy's opinion on YouTube, that's really what I'm trying to offer here. So there you go. That's a way to give you the help without getting in trouble. How about that? Luckin Coffee. We've got a lot of questions on the Luckin Coffee. That's unfortunate. That's not something they recover from right away. Yeah, I don't know what else to say there. You like playing with some Delta Airlines there. I know a lot of people are saying, all right, look, you got to take a chance here, these discounts in United and Delta and the like. I kind of like, and I'm not telling you what to do, but I just kind of like the idea of maybe splitting up a little bit. Why not have a global carrier and more of a regional carrier? Why not mix the two and build a little mini portfolio? That way, if our economy opens up faster or the world economy starts to open up faster, you're still participating, you're not locked in. You know what I mean? So I don't know. I don't have any data to say that that's a good way. That's purely an opinion. I just think I'd rather have a spread, a little diverse mix of regionals versus globals if I could. Yep. What's the first ride you're going to ride at Disney World? I think it's got to be Space Mountain, man. I just imagine those things sitting around collecting dust, but Space Mountain, they'll get that thing fired right back up. I think that's going to be the first one that I go to. Maybe I'll do a video or something because, God, I miss Disney World. They just opened that place. That's it. All right, I'll wrap it up there. I appreciate you guys sticking around with me here today and appreciate the help. I appreciate it. We will be back tomorrow. Do this all over again. Remember, no show on Friday because it is Good Friday. So I wish you guys Good Friday early. But we'll be back tomorrow. We'll do this all over again. Thank you so much for watching. Glad you're here, and we will talk to you later. Be safe and enjoy the rest of your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.